To understand why our money is built to collapse, we must first challenge the biggest illusion in economics, the idea that money equals wealth. It doesn't. Money is debt. It's a claim on future labor, future production, and future confidence. The moment confidence breaks, so does the system. But it wasn't always this way. In the beginning, money was a tula, simple way to measure value. Ancient farmers used barley or salt. Merchants in Mesopotamia used silver weights. Societies exchanged what they produced. Value was real, tangible, earned. Then came a quiet revolution. Somewhere between ancient temples and royal treasuries, money became abstract of promise written on clay or paper. And once money became promise, it also became power. The first recorded financial system wasn't invented by traders, it was invented by priests. Around 2000 BCE in Babylon, temple economies recorded loans, interest, and taxes on clay tablets. Farmers borrowed seed grain, promised repayment, and added a fee interest. Suddenly, time itself became monetized, but debt grows faster than the harvest. And so, every few decades, the system collapsed. Debtors were enslaved, land was seized, and kings faced revolt. The solution? A jubilee? A royal decree wiping out debts and freeing slaves? Sound like a reset? It was the earliest form of economic collapse management. It kept populations obedient, ensured elite control, and allowed rulers to rewrite the rules when the debt burden became too great. Centuries later, Rome perfected the blueprint. Its empire ran on silver coins, but silver was finite, and empire was expensive. So, emperors diluted the coins, reducing real silver content while keeping face value the same. It was the ancient version of printing money. Armies were paid, roads were built, and citizens celebrated prosperity. But as coins lost value, prices soared, merchants hoarded goods, confidence eroded, and the empire turned to control. Laws were passed to freeze wages and punish speculation. None of it worked. Inflation became hyperinflation. The empire fractured under its own monetary weight. Every empire since has followed the same path: expand, borrow, debase, collapse. Around the 10th century, China made a discovery so powerful it would change the world: paper money. For centuries, it fueled trade across Asia. Merchants rejected the emperor's notes. Inflation destroyed savings. The dynasty fell. Sound familiar? Europe watched, learned, and waited. Then came the Bank of England, the first central bank. It began lending money, not it possessed, but money it created. For the first time, debt itself became money. Tiaga 19th century stock markets, ships, bankers, and ledgers. The industrial age brought speed, credit, and complexity. Britain's empire ran on borrowed capital. Wars were funded by debt. The American colonies, too, learned the art of credit. The pattern was identical: credit expansion, speculation, crash. Each collapse transferred assets upward. Those with liquidity bought everything cheap. Collapse, again, was not random. It was systemic redistribution. By the early 20th century, global leaders realized something. If collapse was inevitable, maybe it could be controlled. Historical footage of the Federal Reserve's creation, J.P. Morgan, in early 1900s banking halls. In 1913, the United States established a Federal Reserve institution with the power to create money, set interest rates, and act as lender of last resort. It was sold as a safeguard against financial chaos. The Fed could print during crises and tighten during booms. It was a mechanism to expand or contract the economy at will. The design was brilliant and dangerous because every manipulation, every rate adjustment, and every liquidity injection created new imbalances. The result, each was followed by intervention that prevented collapse temporarily while amplifying long-term fragility. Nixon's speech, clips, gold bars fading into dollar bills. For centuries, gold anchored trust. You could exchange paper for metal. But in 1971, that link was severed. President Nixon ended the gold standard, turning the US dollar into pure fiat money created by decree. The promise of convertibility vanished. Only faith remained. From that moment, debt became infinite. Governments could borrow without limit. Central banks could print without restraint. The world entered the era of floating currencies where value was no longer objective, but political. The system didn't break in 1971. It was redesigned. The collapse mechanism was now built in, accelerated by policy, protected by illusion. But beneath the surface, something sinister was happening. Real wages stagnated. Debt replaced income. By 2008, it imploded. Trillions vanished overnight. Banks collapsed. Governments intervened again, printing money to save the very institutions that caused the crash. The pattern held: privatize profits, socialize losses, reset confidence, repeat. We were told it was a crisis of greed, of mismanagement. But the deeper truth, it was the system fulfilling its design. Infinite credit demands infinite rescues. After 2008, the solution was more of the same: lower interest rates, quantitative easing, and more debt. The global financial system became addicted to stimulus. Each new injection postponed collapse but deepened dependence. By 2020, when the pandemic hit, the world printed over $10 trillion in new money. Asset prices soared while small businesses died. The money system wasn't healing, it was hollowing out. Every empire that tried to print its way out of decline only accelerated its demise. Crypto trading screens, digital central bank currency animations, protests, inflation charts, asterisk now. In the 2020s, the blueprint enters its final form. Central banks plan digital currencies. Debt levels exceed global GDP. Inflation surges. Confidence erodes. And inequality explodes. We are living inside the same pattern that destroyed Babylon, Rome, and countless empires since. The next collapse won't be local, it will be global. The system's design demands it, because the only way to reset unpayable debt is to destroy the illusion sustaining it. And every reset transfers power upward to those who control the reset. Collapse then isn't Federates the mechanism of renewal for the powerful global debt, over $320 trillion, 3 times the world's GDP. Every major currency has lost over 95% of its value since 1971. The top 1% own more wealth than the bottom 90% combined. Each decade since 1971 has required exponentially more debt to produce the same growth. In a debt-based system, debt must grow faster than income, or the system collapses. And because perpetual growth is impossible on a finite planet, collapse becomes mathematical certainty. Create money through debt, expand credit to fuel growth, inflate asset bubbles, centralize power further, asterisk every time. The same playbook. Every time, the same winners. And every time the system resets, the middle class, the buffer between rulers and ruled, shrinks. Control consolidates, and the illusion of progress begins anew. Here's the most uncomfortable truth: collapse is profitable. In every crisis, those with access to liquidity buy distressed assets, real estate, businesses, even governments for pennies. When the system resets, they emerge stronger. That's why collapse isn't prevented, it's managed. Modern monetary policy doesn't aim to stop crashes, it aims to choreograph them. Every bailout, every stimulus, every interest rate tweak is part of the dance. It keeps the public calm while the architecture This is why the system must collapse. It's how wealth and power consolidate without open conflict. The next phase is already being built: digital central bank currencies, CBDCs. On the surface, they promise convenience and security. In reality, they mean programmable money that can expire, be tracked, or be restricted based on policy. Governments see collapse coming, and they're preparing a system that survives a new kind of control through code. The same ancient blueprint, now powered by algorithms. Debt will be forgiven, but only within the new system. Participation will come with conditions. Freedom will have terms of service. So what can we learn from this centuries-long experiment? Collapse is how elites maintain continuity, not chaos. The true currency is confidence, and it can't be printed. The more we see the pattern, the harder it becomes to control us through it. The question isn't whether the money system will collapse at us, whether we LL recognized the design before it does, because every collapse resets the board, and every reset redraws the map of power. If we keep mistaking manipulation for misfortune, we'll repeat the same mistakes. But if we understand the blueprint, maybe we can design something better. If this story made you think differently about money, share it, because awareness is the first step toward change. Subscribe for more deep dive documentaries revealing how history, economics, and power intertwine to shape our world. And remember, the next collapse isn't coming. It's already designed.